Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago. This is a regular segment where Nick comes back and I get to pat him on the back for knocking it out of the park again. Nice job, Nick.
Thank you, Michael.
My pleasure. Okay, no need to go and recap all of the home runs. I mean, let's get into what's going to happen next. You just did it again and again and again and again. Unless you want to talk about it.
No, well, so far so good, and that's all we try to do is just keep having a great 2011. It's really been a crazy trading year, but we've been able to really be on the right side of every trade, and that's all we try to do.
Yeah, and I'm going to second that. You have been. FXE, what's going on with the currencies?
Well, we talked about that last week, and I had mentioned that it's setting up to go lower. We went short the FXE at 140.90. It's trading around 135.47 today. Yesterday we covered pretty much a lot of the trade. We're looking for maybe a small little bounce here, but we're still holding partial position. But I ultimately think this is headed lower. Okay. Probably within the next couple months, this thing I think is going to trade down to the 128 level. And we talked a little bit about that last week, and it looks like it's in motion already.
All right, give me some background of why you think, for the people that are just joining us and didn't hear last week's broadcast, why do you think it's going to be heading lower?
Well, basically, last week we touched a little bit upon the European Central Bank becoming more like the Federal Reserve, basically not having to answer to anybody, and will be able to print unlimited euros to bail out Italy and Spain. And just yesterday, we saw the Italian bond yields surge over 7%. This year, they're pulling back a little. Today, they're pulling back a little bit just because of the European intervention. The ECB is buying some bonds there to keep those yields lower. But what do we do with Spain? What do we do with France? There's really no other way to bail out the European Union except monetize the debt, and that eventually will probably happen in early 2012.
Okay, all right, and. Targets, do you think what we're going to get down to the beginning of 2011, those January lows, or
in early 2012, I think we'll get down on that FXE. You're probably looking at around the 128, maybe even lower. To be honest, let me just looking at my chart here. And
so you're really bearish. This isn't just.
I'm thinking,
okay.
we may go down to the 2010 lows, which would be around 118, 119.
Okay, all right. That's going to be a great trade. All right, and because I see it's below the averages, the 50 and the 200 period. So, all right, good.
There's some support in there first. It's not going to be right away, but it's setting up.
Okay, all right. Let's move on to the next market you were going to talk about, the TLT.
Yeah, well, last week when I was on the show, we basically came right out and said, there was a setup for the TLT that day. So you said, that was great. We're getting it at real time, and sure enough, we had a real nice bounce on that TLT there on the daily chart from the time I was on your show. I guess it was around 116, and it traded all the way back up to around 119 yesterday. Today, pulling back a little bit, and right now it still looks pretty solid. It's still holding steady and just consolidating there for one more big move up, possibly into the 122 to 125 level. So basically, I'm just telling your subscribers, if they're in it, just put a little stop in between a little lower and let it ride out.
Okay, I'm looking at a longer-term chart, a weekly, on that TLT, and that takes us up to an area where a lot of people are wondering if we're going to break through that and make new highs, or is that a place where you're thinking it's probably going to end, we need to get out?
Yeah, it's going to end there. It's going to end there. You're going to want to get out. Max move would be 125, in my opinion. You have to bail at 125.
Okay, see, that's some information that needed to come out about that one.
Yeah, that's a good point you made. But 125, you have to say, or you don't even have to get out. You just have to trail your stop at that point.
Okay. If you get confirmation on this, are you going to be trading the other side of this, or we're going to just leave it alone because that's?
Oh no, we'll trade the other side of it as well. Yeah, we'll trade the other side of it as well. But right now, we got to give the upside bias to the TLT at the moment.
Okay, I got it. No need to belabor the point with you. I mean, when you say it, it's how does that go from God's lips to your ears? Something like that?
Let's keep it going.
Okay, right.
The good Lord.
All right, let's move on to the gold market. What are you thinking there?
All right, well, one thing about gold, I sent out a note to my subscribers over the past week to watch gold get to 1,800. And those of you that don't have a gold futures short, not a big deal, you could watch 175 on the GLD. So far, we've gotten a nice pullback. But what I wanted to tell your listeners, Michael, was simply that gold, when it moves up, tells us there's inflation being created in this market. And when it moves down, it's telling us there's deflation in the market. Ultimately, I'm not bullish on gold right now, but I will become a mega bull on gold sometime in 2012. I still think we're in a corrective phase for gold. This was just a short-term bounce up from those lows. So basically, I just want to let your subscribers know we follow gold very closely. We're not really bullish on gold at the moment, but in 2012, we'll be a mega bull on gold once again.
Okay, then that means some event is going to occur that you're keeping an eye on.
Oh yeah, well you're gonna get another lifetime buying opportunity in gold in sometime in 2012. I don't want to give away the date, but if the cycle plays out the way I think it's going to play out, you're going to get a lifetime buying opportunity in sometime in 2012.
So is that
much lower prices than it is now?
Okay. I was going to go there. So you're looking for a pretty good pullback that's going to be a trigger point right prior to the next QE3, and your cycle work is giving you an idea. You don't want to release
I don't want to release it too soon, but yes, that's what we're going to be looking for.
Okay, all right, but I'm sure you'll be able to tell us when it shows up, right?
Sure will.
Okay. All right. Silver, you wanted to talk a little bit about that?
Yeah, well, silver is lagging gold just a little bit, and the reason for that is simply because it's partly an industrial metal. So the pattern on silver actually looks okay at the moment, but the same thing stands. You're going to get another real good opportunity later in 2012 to own silver. So right now it's known as the poor man's gold, but the truth of the matter is it's going to make people a lot of money. And you're going to want to own silver sometime in 2012. Right now, it may hold steady, but it really shouldn't get past the $36 level or much past that at all.
Okay, wait a minute. I'm looking at silver right now somewhere up there about the 32, 33 area, 35, excuse me. And you're not looking for a rally past 36, so that would give me a question about the other side of the trade. Do you have targets?
If you're looking for the short side of the trade, the setup isn't there just yet, but there will be a short on silver soon.
Okay. Well, let me be the one that jumps out there then, because I've got a Fibonacci extension that gives me like a $14.90, $15 an ounce on the silver as a target if it breaks that low, so around 26.
Yeah, I'm still going to stick with...
I wanted to ask you about that.
Yeah, I'm thinking more along the lines of 26, and then on a real overshoot, maybe around 20.
Okay, so you're thinking that this low that happened, when is it? About the fourth week of September may hold.
For short term, yeah, it'll hold short term. But once we crack that, we're probably on a closing basis. We're probably headed down to around the 21 to 20 level.
Okay, so you've got something in between that area that I've got for on my longer term stuff. Okay.
Yeah, but again, sometime in 2012, we're going to be able to pick that up again and ride it out for a mega move, and I mean a massive move, not just a few points. This is going to be a lifetime buying opportunity. Okay,
got it. Well noted. Before we get out of here, let's talk a little bit about the stock market, where we are and where we may look to put a trade on.
Well, right now, this market is just very, very choppy. But overall, even with yesterday's big decline, and I covered some short positions yesterday, but I still think we're probably going to go down into options expiration. We do have the Thanksgiving holiday upon us on November 24th. That's usually going to be a light volume period, so the markets could float up, and then you have end of month. So that's going to be the consolidation phase for this market. You'll probably get one more buying opportunity on the long side, and then I think it's lights out for this market after that.
Okay, hold on. One more buying opportunity on the long side, and then lights out. I wanted to get some more clarity on that. When you say more buying opportunity, do you have any cycle times or support areas you're thinking about at this point?
Well, I'm just watching the pattern. My cycle work towards the end of the year, with the holidays and the light volume, I don't really like to give out, the rock solid dates because we have basically Thanksgiving the day after. You have the Christmas, the New Year holidays. So it's more about pattern than anything else with me. But I'm thinking, you're going to get that Christmas rally. So be careful during the month of November, and you look for that December bounce.
Okay. All right. Well, the reason I bring that up is I've got a cycle point coming up here on Wednesday next week. I just wonder if that's anywhere near what something you're looking at, or at this point, let's just see how it plays out. No,
I actually have something similar as well. So it's very possible. But next week is options expiration, and that's a time period where there's a lot of institutional games being played. You'll hear a lot of rumors in the market that may or may not be true. It's just a very turbulent time where I like to stay more neutral during options expiration week. But, you have to look at that time zone next week. And as I'm really watching it more so for the week after, which is going to bring us into that light volume holiday shortened week.
Okay, now that's important information. Before we close out, just so everybody can watch it with you, how do they get to you so that they can watch you trade and go through a day when they need your guidance to get on the right side of the market?
Sure. You come over to InTheMoneyStocks.com. You could take a free trial.
Great. Thanks, Nick. I appreciate that, and we'll be talking to you this time next week.
Thank you very much, Michael. Take care.
You too. All right, everybody, that was Nick Santiago, President and CEO of In the Money Stocks.